everyone, and welcome to Stock Market Today. You have Alyssa Corum and Ed Carson here to break down today's market action. And we saw tech stocks squarely in the spotlight today, Ed, and looks like this rotation is swinging the other way.
Yeah, it was pretty amazing action. Nice action on the tech side, not so nice elsewhere. Microsoft and PayPal are a couple of stocks that are right around buy points. Well, steelmaker Arcelor, Mittal, it's breaking hard like a lot of its peers.
Yes, it is. We'll get to that. But first, a look at the major indexes, kicking things off with the S&P 500, which closed essentially flat for the day. This chart is slightly delayed, but we also saw the Dow close down about 0.6%. The Russell 2000 down almost 1.1%. And the NASDAQ outperforming today, up about 0.9%. So quickly, we're showing the S&P here. I'm actually going to go ahead and flip on over to SPY, the ETF, which is a little bit more real time. So still holding that 420 level or 4,200 on the S&P 500 and that 21-day line.
Yeah, so it's still doing all right, but the S&P is really sort of a mix of those tech and non-tech. And there was a time when the S&P really seemed to be leading, not just because it was the strongest area, but it was also because you had broad leadership of, materials and, and mining and some of these others, and some chips and some tech. And so it really was the right one to look at. Now it just seems like this half and half thing. And whereas the NASDAQ is strong and some of the other sectors, not so much. NASDAQ, nice move here, right below record highs. You can see it sort of got above, I think, last week's high or Monday's high. The NASDAQ 100 actually did hit a new high. So, that's, which is represented by the Q. So that one clearly showing that strength. So that was very impressive. Nice run here. It just seems like the market has trouble, everybody getting along. I think, even though last year's rally was, tech. Well, actually, a lot of other stocks went up too. They just didn't go up as much. Or, we figure, well, why bother? I can buy, Shopify, I can buy these other ones. I don't need to buy a rebounding Caterpillar. But this year, it's been a lot of split rallies, and now we're just flipping the script. Tech is no longer there. I think the Dow, it's getting a little more worrisome in that regard, and it's a reflection of some of these mining and steel makers and all that stuff. Financials, which look sort of promising yesterday. Well, the treasury yields basically erased those gains and they're gone. Definitely a lot of whipsaw continuing in this market.
Yes, and quick look at small caps before we get to some stocks here, and closing off lows, Ed, but coming dangerously close to that 50-day line. So small caps coming under pressure as well. And now it seems like the question is this rotation this way, the door swinging the other way, is it going to stay here for a while? Or are we going to see more of this sort of day-to-day chop where it's hard to chase where the leadership is?
I don't know. I really don't. I mean, it's just like you would have had a different view of it just a day earlier, maybe, certainly on the financials. Oh, look, if maybe, commodity prices are pulling back a little bit, well, if they stabilize and turn around, well, some of those sectors can bounce back. If treasury yields, we've had a two-day reaction now to the Fed. If treasury yields rebound over time, well, financials will come up, and that might also put some pressure on tech. So we really just have to see, but I don't think investors, until it really decisively changes, I think investors should assume that sector rotation is going to continue.
Right. And, a lot of the notable winners from this year have suffered enough damage this week, and we will get to one of them later in the show, that it seems like, okay, we at least are going to see some basis form from here. But I think one thing's clear, a lot of these stocks that have seen nice run-ups this year and really since last November are triggering sell signals in a big way, either last week or this week. So,
yeah, that's absolutely
pretty significant damage.
Significant damage. They're not coming back right away. Yeah, that's for sure.
Okay, well, let's check in on Microsoft, ticker MSFT, carving up the right side of a cup base here and only 1% below a potential cup buy point, Ed.
I don't want to make them, go crazy over this one, because it's not like, obviously, you can look at that RS line. It's improving. It's getting close to the April and the January highs. It's definitely getting there. And it's not that far from the 10-week line. So there are some of that. It's a long-term leader. So it has a great record over the last, say, 7 or 8 years. So I don't want to make it out of a solid growth rate, and actually there's been some acceleration, on the revenue side and on the earnings side. A lot of things to like about it. One reason I'm using this is to put some of the other software names. Some of them have already run up. I mean, some of them already cleared early entries or buy points like CrowdStrike or Shopify. And so it's not really the time to buy them. They may cross another one, but you don't want to chase them either. So I just keep that in mind. Definitely a time if you want to get into things, you want to get into them early, because if software rolls over in 3 weeks, you hopefully, you don't want to buy them on the 4th or 5th week of that run.
I think that's a good point, Ed, but go ahead.
Oh yeah, I'm sorry. Yeah, it's this Microsoft is a long-term leader. So it's cloud computing more than software. So even though it may not be a leader in that, it's a little bit more of a cloud computing services play almost. That's what's been driving the growth and driving, I think, the stock over the last several years.
And do you really, so on that note of it being a long-term leader, do you really need for it to wait to break out of this cup base, or could you size your position off of the 10-week line, which it's now roughly 2.7% above that level?
I think you could. At this point, I would probably be waiting, what the heck, it's just one more percentage point to get it over that breakout point. But I mean, you certainly could have earlier in this week, and you still can if you want to, or start a position. Yeah, it's definitely not extended at all.
And when it comes to CrowdStrike, Zscaler, Shopify, stocks like that, it seems like investors should be on guard and maybe not be afraid to take at least some profits into strength while they're seeing this strength, because the rotation is still in question at this point.
That's always the case. I mean, some of them are still within their bases. It gets odd to say taking profits within a base. So you might want to wait. So there's that, but definitely you need to be don't want to be buying some of these stocks if they're extended from where the entry point was. Maybe they'll form handles. I mean, you could certainly, like a CrowdStrike or a Shopify, there's others, they might form handles. And then it's like, okay, because the risk is that you buy it here, it's a hot stock, and then it comes down 10, 15%, and it's still acting okay, but you're down pretty hard.
Right. Yeah. Shopify up over 16% this week. So, if you have a gain of 10, 15, 20%, the ducks might be quacking there a little bit.
It might be. I see your point. I see your point. Yeah, it's hard for me to think about selling a stock inside of a base, but it's like, because you're hoping that it makes a real momentum, but it is that kind of market. It's
we'll have to see.
Yeah.
How it unfolds. And PayPal, another stock that we want to check back in on. One of the big winners of 2020. It's been in consolidation mode for 18 weeks here, Ed, but it's had a string of up weeks, up 2.5% for the week, and it's flirting with an early entry now.
Yeah, it actually closed just above sort of like the midpoint of that base, around 277.96 would be the buy point. So it's just a few cents above, technically above that. Actually, the volume came into it at the end of the day, so that's nice, because we haven't really seen volume over the past month as it's come up, and so that's a little worrisome. You don't want to see a stock moving up like that. At least it hasn't gone straight up, but you want to see some institutional support. It's nice that it had a little bit of volume here coming in. So this would be a place where you could step into it a little bit, either as an early entry position trade, or even still maybe as a long-term leader, because this is another one. It's not that far above its 10-week line, where you could step in, maybe build a position. You might add to it if it actually broke out or formed a new handle, but doing that now as opposed to that. But I do think that the volume and, to a certain extent, the relative strength line are a couple issues to be thinking about with that one as well.
Mm-hmm. And the base pattern itself, it's not just a pretty steady run up and a gentle pullback. It's been in this sort of a consolidation mode and a little bit messy there. So not a nice, pretty little base pattern, but
no, it's not. Microsoft had a much prettier pattern in that regard. I mean, yeah, but a lot of the NASDAQ sort of had this action, and a lot of the more highly valued ones, we're going to see more exaggerated things. So the NASDAQ looked a little messy over the last few months, and this one's going to be a little even messier.
No doubt. And as we alluded to earlier, a lot of the standouts from 2021 suffering some pretty significant damage this week. Arcelor, Mittal, ticker MT, among them, down over 13% for the week. So a clear break of the 10-week moving average, Ed. a decisive sell signal.
Yeah, we say it's a decisive sell signal near the end of the week. So technically it could rebound. And yeah, I don't know, if steel prices jump 8%, which is not out of the realm of possibility, this could have a big rebound, but it does not look good. I think as Justin Nielsen was saying on IBD Live, I think it was about this stock, but it could have been something else. It's like if this rebounded, it wouldn't look right. I mean, this is not, it was basing for a while. You could have argued until this week and say, well, maybe it's setting up again or basing somewhat. There was a lot of miners and metal stocks that were doing that. Well, the thing is, it changed. This week has been really ugly for a lot of these commodity plays, whether it's this, whether it's miners, whether there's fertilizer. It's just been rough, and you have to react to it when it's like that. Even if you bought it and have a decent gain, like it's still a pretty strong sell signal that you may want to just say, you know what, this run may be over for a while, and I'll just step away.
And you mentioned waiting to the end of the week. We often say that selling is not an all or nothing proposition. You can start scaling out when you see something like this. And now we'll have to see how it closes for the week. But right now, on track to close well below that 10-week moving average. But that is it for today's show. Thanks so much for tuning in, everyone. We will be back with more tomorrow morning on IBD Live for our last day of the free access week. If it's your first week checking it out, and joining us will be our weekly special contributor, David Ryan. So looking forward to getting his thoughts. We may actually talk about PayPal a little bit. So looking forward to that. We'll see you there, investors.com/IBD Live. Bye for now, everyone.